this section is going to be all about the specific list of supplies. It's the second item on the negative list, which is there because it does not add any value. Now it is a list inside a list. You could think of the items on this list as falling into the category of luxury goods somewhat. You know how luxury goods work, right? The government does not really need to promote or incentivize luxury goods. So these items don't add any value and they tend to be more towards luxury goods. There are 4 main categories under this list. The first one is again a sub-list of 6 items, generally falling into the category of food, beauty, and healthcare. There's an exception to this list. We'll get to the details of this list in a bit. The second is on membership of club, health, and fitness center. So if you have an input service that you've taken for membership of club, health, and fitness center, then the taxes that you pay on such service, you cannot claim input credit on such taxes. How would this become an input service for you? If you give it as a perquisite to your employees, membership fees for your employees is paid by the company, then it becomes an input service. It is used to motivate employees. But the tax you pay on this falls in the negative list and you cannot claim it as input credit. Poor George. The third in this category is rent-a-cab, life insurance, health insurance. Again, it could be inputs because you provide it to your employees. The tax component on these are not allowed as input tax credit except in one case. We'll get to the exceptions in a bit. The fourth in this category is travel benefits extended to employees on vacation, such as leave or home travel concession. Well, you would know that LTA is a deduction allowed under the income tax. So this could fall in the category of no double tax benefit. Now examine all 4 categories. The first one definitely is consumer facing. Food, beverages, health, beauty. All of those are consumer facing and they don't really add any value to your product. Membership of club is just to motivate employees and not directly going into any output. So is the case with rent-a-cab, life insurance, health insurance, as well as travel benefits. And that's why this list, the specific list, falls under the category of no value addition. Now let's get into the details of the first item on the list. As I'd mentioned, this is again a sub-list of items. There are 6 items that fall into this category: food and beverages, outdoor catering, beauty treatment, health services, cosmetic, and plastic surgery. All of these will not directly contribute to value creation, except when the inward supply is used to make outward supply of the same category. What do you mean by this? Let's check out an example. A wholesaler who sells cookies sells these to a retailer, the business who buys this cookie and pays GST on it. Now this business sells the cookies to customers of its hotel business. Now since cookies form part of food and beverages, hotel is also in the same category. It's an exception to the negative list and input tax credit would be allowed. Let's take another situation. The wholesaler sells cookie to the business pays GST, but business uses these cookies for staff welfare. There is an inward supply, but there isn't any outward supply. ITC will not be allowed because this falls directly into the negative list. Another situation, same example, the business will use these cookies to provide for its customers of health service business. Now it isn't in the same category. Cookies are food and beverages, health service and cookies don't go along in the same category and therefore input tax credit will not be allowed. And so the exception to the first item in the specific list is that inward supplies should be used to make an outward supply of the same category. Moving on to the next exception in the list, which is in the third item, rent-a-cab, life insurance and health insurance with an exception. What is this exception? This exception is in the case where the employer provides these services to its employees. Now, there could be two situations why an employer would provide it. One, because some law mandates the employer to provide these services. And two, no law mandates him, but he just wants to give it as a perquisite to motivate his employees. In situation 1, where it is obligatory for the employer to provide to its employees, then input tax credit is available on these services. While the second case, where no law mandates the employer to provide these services, input tax credit will not be allowed. And so, the exception to the third item in the specific list is that ITC is available on services which are obligatory for the employer to provide under any law. It need not necessarily be obligatory only under GST. Under any other law in the Indian Constitution, if the employer is required to provide such services, then input tax credit can be claimed.